Morning, everybody. Friday at last. Oh, glad we got to the end of this week. Feels like a long one. Don't like it when that happens. But a bit of a quieter morning this morning. Let's see if that lasts for the rest of the day. Morning, Kate. Looking forward to the pub?
Morning, Ryan. Very much looking forward to the weekend, mate.
Yes, indeed. And you got a busy one on, or taking a relaxing?
No, this weekend is a relatively quiet one for a change, so relaxing will be the word.
Yeah, very much looking forward to that. Let's hope we get some weather to go alongside it. Okay, let's get cracking. I'm going to start with some data out overnight. Tokyo CPI coming in a little bit softer than expected, 3.1% for the core versus 3.3 expected. So we were expecting a little bit of a dip, but it's come down a little bit more than we thought or expected. Headline CPI also coming down 3 pips to 3.1%. Softish numbers in terms of expectations, but we're still running way above target. Quick question, Kay, regarding inflation. What would the BOJ like? Inflation stuck at 3%, or running up to 3.5%, 4.5% for a bit, just to put some icing on the cake?
Yeah. In my opinion, we've been running long enough above, but there's too many other uncertainties, and the UEDA was a bit strange. He says like the underlying inflation is still below target. I don't know. Oh, yes, they look at the core of the core, but then if you strip out everything, of course, inflation is zero. But yeah, I'm finding it already long enough. But I think the inflation, they use the word constantly, but there's so much more going on besides it, and I guess that's what he's trying to defend now, to remain on the sidelines. But if you look at how it has moved, other central banks, as we know, would have already acted again. But I think 3% and above is enough. Then you, of course, have to look at what wages are doing and the real wages, whether they are above or below that mark, and that is not obvious every month over there. So I think he's trying to tell the markets that there's more than just inflation needing to fall into place before they act again. But they will be on the path, I think. If now there is uncertainty around that trade deal as well with the US, so that's probably going to keep him and trying to find excuses for not hiking for as long as they don't find a resolution there. And yeah, in any normal circumstances, if you turn around 3% and hold it there, it should be good enough for me.
Yeah, I think they'd love to see a flat line just above 3%. None of this up and down business, just a nice flat line going along there. That's what they'll be looking for. And as Kay says, getting underlying inflation that much higher as well. So we're still not there yet. Anyway, we're still progressing as far as that's concerned. We had some retail sales data out as well, coming in again softer than expected year on year, down up 2.2%, but missing the 2.4% previously. There was a bit of a wobble for the large retailers in May, coming down 0.2%. But retail sales, we know they're a bit of an up and down number. Anyway, a little bit of data out of China as well. There too, industrial profits year to date down 1.1%, which again could be a little bit of a flip from all the trade stuff that happened in Q1, where those profits rose 1.4%. But who knows about that? Right, moving on. What do we got next? We had a bit of data out yesterday from the UK CBI retail sales numbers, which came in a little bit shocking at -46. I mean, this has been quite negative for quite some time, always glass half empty. but we know that we had a bit of a stinky retail sales report. This may suggest that kind of stinkiness could continue. We did have Bailey out as well, saying a gradual and careful approach to the further withdrawal monetary policy restraint remains appropriate. Pretty much echoing a lot of his old lines from the recent BOE meeting. Also said in recent months, the evidence that slack is opening up has strengthened, especially in the labour market. We should recognise that the short-term pickup in inflation introduces some further uncertainty into the near-term outlook for inflation. Asked about strengthening of the quid, he says moves in FX have not been moving based on interest rate speculation, but it's been uncertainties about structural changes in the world economy that have impacted FX. It says investors are reconsidering positions. So a couple of comments there that, well, it's got him sitting on the fence regarding what happens at the next meeting. That comment on Slack and the labour market is the dovish signal. The worry about a short-term pickup in inflation is the undovish signal. Kay, do you think it changed anything for the August meeting?
They're so it's starting to we're starting to get into that I'm unpredictable and I'm proud of it scenario for Bailey again. I really don't know. I really don't know, Ryan. But I do think that they will come over the bridge one sooner rather than later, because we've been talking about those things. None of them really, and potentially for sure not the Bank of England. Looking at what Labour is doing, perhaps they would want to keep those rates high for too much longer. So in that respect, there is not going to be needed a lot of a weak set of data to bring them back to a cut. So I would say, has anything changed? Maybe not, but are we closer to a cut? Definitely.
Yeah, I think you're right there. And in my opinion, they could have gone in at the last meeting and just done a little cut for the summer and let it run, and it wouldn't have made that much difference, but would have been a bit of an easing measure anyway. But let's hope they don't have to play catch up by the time we get to August. Right, moving on to sorry, mate.
Yeah. I mean, imagine that we have weak CPI, weak retail sales, and only a lukewarm employment report in between, and they may all of a sudden be behind the curve.
Yeah, shock. Right, going over to the other clowns across the channel. In Eurozone land, ECB's de Guindos says markets are surprisingly calm in recent days given the geopolitical events. This was a guy who was worried about what the oil price would do to inflation, even though that blip only lasted a day or two. ECB's not says the ECB may well need to keep rates on hold for some time, but can't exclude another rate cut. A bit of data this morning. We got CPI data out of Spain and France. France first, their CPI went up 2 pips to 0.9%. Now, these guys are well below target. 2% is the target area, and these guys are well below and have been below for some time. And now you know why Victor Villeroy keeps pushing for cuts, because he wants to get inflation back to target, but he's one of the countries who's the wrong side of the target. HICP also going up 2 pips to 0.8%. Spain, on the other hand, saw a jump. They are around the 2% mark. They saw CPI at 2.2%, the Eurozone measure at 2.2%, and their core measure at 2.2%. So they're getting some inflation there. But this is the difference between two economies. Spain's doing much better, so keeps that inflationary aspect there. Doesn't mean it's going to be rocketing, but it's healthy inflation. France, on the other hand, as we've heard from in the PMIs, they are cost-cutting. Firms are cost-cutting to try and drum up business. This is what I was looking for at the start of this year, whether activity would come down so much that you see inflation coming down, and as people are cutting prices to get business, and also why the ECB might be forced to take rates lower than they want. Doesn't mean the euro is going all the way back to parity though, but you know, there may be a trade along there somewhere. Retail sales year on year in Spain coming in at 4.8%, looking a little bit better there. Back to the US. God, I'm doing a lot of scrolling today. So we had GDP data out yesterday, which was the final numbers, so no big deal. It did come in softer though, at minus 0.5%, but now we've done all the final counting and whatnot. Some of the price measures as well, PCE and whatnot, looking a bit hotter too. It's no real surprise to see all this, because we know what was going on in that period in terms of trade and front running, tariffs and all that sort of stuff. So we're just about to close off Q2, so none of it matters. We do have PCE today, which I'll talk about in a little bit anyway. But some of the other measures not overly good. As you can see, their sales down 3.1%. Some of the consumption numbers, real consumer spending 0.5%. But as I say, we can look through a lot of this data anyway. We did get durable goods orders out though, and that was a whopping great 16.4% gain. So we've got a lot of volatility in these numbers at the moment, all to do with the big ticket items. Non-defense aircraft rose 230.8% within those numbers. So you can see why we're getting these wild swings. But if you take out some of the other factors like core, or look at the core durable goods, things like that, 0.5%, they're looking a bit better. They're more consumer related, things like capital goods orders, non-defense ex air, we're up 1.1%. That's a category that's looked at for its investment aspect, capex aspect. So that was a decent positive there. So overall good, even if you strip out the volatility. We got some trade balance data as well, goods trade, which came in a bit worse at 96.59. Again, we're coming out of all this early quarter trade stuff that was going on there, with a lot of importing going on rather than exporting. So we're still washing that out. It's going to make this type of data a bit funky and not painting a really clear picture. Wholesale inventories dropped. Don't know why it's green, but it dropped 0.3%. A bit of a drawdown there in inventories. Retail inventories, though, still in the positive, excluding autos, 0.2%. This is something that one of the Fed heads mentioned in a bit, which I'll go over. Jobless claims as well. We were tracking up in the 240s. Now we're back in the 230s. There was a little bit of a pickup in the continued claims coming in. If I can find it, well, it's going to be here somewhere. There we go, all the way up there, coming in at 1.974 million. So that has tracked up a little bit as well, but we're still not in panic stations mode for that sort of data. Pending home sales a little bit later. Came in up 1.8%, so that was a healthy gain on the prior loss of minus 6.3%. So a bit of a clawback in that number there. Fed's Goolsbee says the jobs data shows the market is pretty steady and stable. The Fed needs clarity that there will not be an increase in inflation. If one does come, that it will be transitory. If inflation stays in the range of 2% and the uncertainty is resolved, the Fed is on a path to lowering rates. It says an early announcement by Trump of Powell's replacement would have no impact on the FOMC. Fed's barking. Fed policy is well positioned for where the economy might go. Inflation will be pressured higher by tariffs. Businesses are still in pause mode amid the uncertainty, and the exact timing of a Fed move doesn't matter that much. Fed's Daily says the Fed is still waiting for more information on inflation and that the autumn looks promising for a rate cut. Fed's Collins says July is probably too early for a rate cut, and the baseline outlook is to resume cutting later this year. Now, talking about inventories, Fed's Cash and Carry says that firms are still working down pre-tariff inventories. So that can have an impact on GDP because they're just using old stuff rather than producing new stuff that people then fill up on inventories. So that might be what we're seeing in the data. The White House issued a statement, or they had sent out Leave It, to say that no decision is imminent on the next Fed chair, but Trump has the right to change his mind. Mexico cut their rate by 50 basis points as expected. They're now running as 8%, so the carry trade just got a little less. There was a change in the statement. Last month, they said that the board estimates that looking ahead, it could continue calibrating the monetary policy stance and consider adjusting it in similar magnitudes. This month, it said looking ahead, the board will assess further adjustments to the reference rate. Okay, is that a little bit of a show of hand from the Banxico that they might be going into pause mode?
Yep, I guess so. I think that's they announced it. It was pretty clear actually. I start to like the Banxico's communications. We all know that it's dangerous to give forward guidance, but I think that's exactly it. Another cut announced, and now we pause. We see what's going to happen. There's still enough uncertainty around anything really, and especially on trade or migration, for them to continue to expect further cuts at the same rate. But the data also had a quick run or reminding me about the data. There's nothing right now that says that there's a need for either to continue to cut aggressively. That's one, but there's also no need for really to start panicking that stuff is heating up again. So I guess that's where they are. They like to keep a healthy positive interest rate, because that is still helping investors as well staying there. Yeah, I think it's a pretty very neutral, because it's been announced, and also telling the market now we are also now data and event watching. So nothing really. Dynamics didn't move. We're talking about still an emerging or less than how shall I say, the major currency. So we can expect a few wobbles, but we didn't even get one. It was really very, very quiet, and just because they literally did what they announced before. So there was absolutely zero surprises in there.
Yeah, I didn't know any neutral rate talk, but where do we think they would be potentially looking to park up? Maybe between this 6 and 8% area?
Yeah, they're always, or they should at least always stay in positive real rates, and that'll depend then on where inflation will go. And even though it's been somewhere, well, it's been coming down. But it has also been relatively stable of late in Mexico as well. But we need to know that their inflation is it's now around 440-ish. Okay, so it's jumped just a little on the year on year. It jumped just a little from the prior one, but they always will want to keep some positive yield in there. So in current context,
Oh, we lost you.
let's say that they stabilize somewhere around 3-4%, all else equal. They will probably stop at around 6% or so in the interest rates. Much lower than that, I don't see them go right now, unless we get massive deflationary factors somewhere.
Yeah, so keeping an eye on this sort of thing, where the rate may come down to, just gives you, maybe a bit of an idea on how to trade the MEX. Not that it's trading with a country cutting rates at the moment, anyway, while it strengthens, but you get the picture. If there's a sudden pause or turn in monetary policy, the end of a cycle, then that's something that can affect any currency that is associated with it. Right, where was I? Mexico. Trade stuff. Let's get on to that. Let me clear up, get rid of some of this stuff so I know what I'm talking about. EU has said that the US has presented a new trade proposal, and that's been shared with leaders, and they're going to chew it over. Lutnick has been coming out all bullish. He's optimistic on an EU trade deal, says July 9th is set as a key tariff deadline. A European deal is expected to conclude towards the end. He praised the EU for progress following a slow start. He said that also July 9th marks a final date for deals or reciprocal tariffs, even though they've all said previously that anyone negotiating in good faith could see the deadline kicked or leeway given. We've also had some headlines throwing up that's moved markets, but isn't really much of a much. Lutnick again saying that US and China have signed a rare earths deal. This is basically everything that they agreed in Geneva and then re-agreed at their Trump call and all that sort of stuff has finally gone down on paper and been signed off. So it's nothing new really, although the market or the way some of the news-wise spun that headline, it was if a trade deal had been done. But anyway, Trump said one deal has been signed with China. India is possibly next. He also said, after having another dig at Powell about cutting rates, he said, we'll probably just extend short-term debt.
We're losing you, Ryan.
Is he giving something to the market with their debt?
We were losing you, Ryan. Repeat what you just said.
I'm going on a wobble. Where did you get me? Did you get me at Lutnick and China?
Yeah, Lutnick in China, and then afterwards you went a bit wobbly.
Yeah, Trump said he's obviously signed the deal with China and India next, or India possibly next. And then he said we will probably just extend short-term debt after moaning about Powell not cutting rates. Is that a potential signal to the market on what the US is going to do with debt issuance, or is he just?
Yeah, there is. There is a lot going on around this debt thing. Yesterday or the day before, late evening, there was also articles floating around that they may do something, a change in rules to all of a sudden make vanish, at least temporary, a part of the debt. You can trust Powell and trust Trump and his entourage to try and find every possible angle or rule that could make the deficit look better. Extending the debt is something that the US has done forever, no? I mean, there is no extreme, there is no big surprise there, but it's probably. Well, I mean, it's a bit early because we don't know exactly what they are going to do. They're still going to cut taxes and stuff like that, but they haven't really pressed the buttons yet. But it seemingly sends a bit of a bit of a message to the bond market saying like, don't go all ballistic selling U.S. bonds because we are still working on stuff. And so to me, it's a very cloudy and I don't know what to think about it really right now for bond markets. The bond markets are extremely quiet, even doing relatively well in the past few sessions. Maybe that is the positive that's coming from trade deals rather than the potential stress that may be emanating from higher debt. So. Yeah, but we also know how the bond markets can all of a sudden react when Trump or Bessent or whoever is going to put the tax cut proposals through. If the bond market doesn't like it, they will go and sell the whole crap out of it again. But yeah, for the time being, I think it's rather trading a bit of positive surrounding potential trade frameworks.
Yeah, and the bond market, as you say, going back to being relatively stable instead of the wild west of of assets as it's been before. Certainly on the short end, anyway. Right, so we've got PCE coming up today. So a lot of people are going to be asking, how's this going to move the markets? Are we, we've had people in our chat room already. Is it going to move stocks? Is it going to move dollar? Let's remind ourselves that Powell has tipped the nod to the numbers again. He said at the FOMC expects 2.3 and 2.6 for PCE and core. He's got it right 4 out of 5 times. Well, 4.5 out of 5 times. And the one he got wrong was just off by a point anyway, so no big deal. He's sucking the volatility out this data point. And that's first and foremost. So are we going to get a big move? Only if we get a big variation. If we get a, 2.8 core or, less than prior. So, 2.1% core number on the other side, or 2.6 PCE or 1.8 on the other side. Otherwise, if we're in and around this by a pip, then we know that Powell is, really, if we don't already, we know that he's really sending a message about volatility in this, keeping things out of that. So I'm not expecting any big moves. Maybe we get a little wobble if the numbers are softer than expected, because we know the market he still likes to whack the dollar any opportunity. So look for that. But is it going to be, are we going to see anything massive? I would say expect not, but, we could be surprised. What are you thinking about the day today, mate?
Yeah, same thing. Same thing. We've seen some kind of pressure, so we may see that little uptick in the prices. Yes, will the market be spooked by it? I don't think so. For as long as we're close enough to what Powell says, he's actually. I think it's not bad to tell the markets calm down. We know we kind of know, or telling the markets our models are sort of working. So which can't be said about the Bank of England models or the ONS numbers in the UK. So yeah, I think it should not be a mover, and I do agree though with Bubble Boy in our room, who said like well, the personal income data have been really good. That could be perhaps a bit of a point if they are expected to come down. So if they come down more than expected, if that's going to put a bit of pressure on the consumer again, and that may be something that we need to um, keep an eye on as a kicker, if we see some divergence in the data. So that's one that I'm going to perhaps look at, just as a little bit of an extra spice on the side. But we can also not forget that we are in the end of month, end of quarter, end of half year sphere now, and just want to reiterate that we could see surprise moves out of anywhere, which go completely against the picture that we will have had at 1:30 our afternoon. And so just I don't think, unless the number is really out of whack, I don't think I'm going to trade any of that PCE stuff today.
Yeah, very much so. And, as much as this has become a bit of a boring data point, it could spice up over the next few months, because, part of Powell's reason for staying on hold is that he expects, or he and, as he says, other forecasters are expecting inflation to pick up. And at the FOMC and at his meetings this week, he said June, July, August is when they expect to see that coming. So it might be a nothing burger this month, but he's given us a window, and the market's going to look at that window and say, right, you're expecting inflation. Are we going to get it? And obviously CPI will be first, but then PCE will follow up. And if we get June, July, and we're not seeing this big tick up in inflation, then the market is going to start getting all dovish over the Fed again. Now, depending on what the dollar's done over that time, Kay, is it going to influence the buck further, or will the market just be like, well, we're already, out of dollars or short dollars now?
I think so. And to come back on what I said about him telling the market that their models are pretty right on because, as you say, he's been right 4.8 times out of 5. It's going to be important because we likely going to know a lot more about trade deals or the bust up of potential outlook for trade deals. And because EU as well, yesterday there were articles floating around that they may make some concessions to get a deal done with the US, and it's all going to fall, or it should all fall, inside his window where he said over the course of the his testimonies that we had this week that leaving the door open for a decision to come where he was like, really, we are patient, everything is going fine. That is, he still repeated, but he opened that window for decisions, and it is going to be important, Ryan. And not we are not going to have to see huge variations. It's just, are we building a new trend? Are we seeing those numbers blip, like he said, and then come back off? It is going to be important, and I think over the course of the next 3-4 months, add September in the frame as well, because that's where we should start to see those jobs, etc., start to move. I think we are in for a very very hot period to come. And also traditionally, when people come back from holidays, September, whatever, the big money movers, they will have had all those numbers to crunch and to put in their models. And I think we are going to see pretty big moves, whether Powell's worries about inflation get confirmed or in the contrary. And then I think that things could really hot up if on the contrary, inflation comes down and the job market is further cooling. Then we will have a big move on the other side. But as we were talking about that, there is still this very good possibility that inflation remains kind of where it is, but that all the hard data hold up in the US. If they make good trade deals, it is very possible that all those data hold up. And then those same big money managers who will have, in the meantime, already rebalanced some of their flows, which they are still doing or in the midst of doing or coming close before the summer of being done. They will have to revise their opinion to the other side again. So we are, I think, going to see big moves, Ryan, indeed.
Yeah, and Blake tried putting us on the spot yesterday. When's the dollar going to turn and whatever. And I've been thinking about it the rest of the day. Obviously, there's a lot of components, but if we don't see this inflation bounce as Powell is looking for, okay, and then they are going to resume cutting, which, as Goolsby said, take the uncertainty away. The Fed is still on a path to lowering rates. That is potentially when you see a turn in the dollar, just on the monetary policy side. Because remember, we trade expectations. We don't trade the actual. We trade when is a central bank going to do something. And when the market knows when it's going to do it, that's the end of the expectation trade. So if the Fed get back to cutting, it may not be negative for the dollar from that point, because the market's traded the expectation now. Conversely, as Kay's just mentioned, and as I've been saying, if all the uncertainty passes and all those firms sitting on their hands now suddenly go back to work, we're going to see a boost in the economy. Now, we'll probably get the market going the other way and thinking, oh, the economy is picking up, the Fed are going to stay on hold for longer, inflation is going to go up, and then everyone gets bullish the dollar again. But that's not necessarily what may happen, because the Fed could continue to cut even in a strong economy, because they want to get rates normalized, not down to stoke the economy, but just to normalize rates. So I think, if you have to pick a point where the dollar might turn, yeah,
I think if they
August,
only cut on the
September.
basis of inflation, the dollar can strengthen. If the rest of the numbers hold up, and they only cut on the basis of inflation, the dollar can strengthen, because if the rest holds up, that will probably mean that the US has struck trade deals where everybody, but especially the US, can live with, because that's and then the economic activity can pick up again. But there's it's too early to call it right now. But there's
Yeah,
so many variables in everything that's going on right now, that I don't think that for the time being, big money is changing their view, right, on anything. So
yeah.
yeah, it's much too early to call, and there's a lot of variables there.
And that's something that I want to address Mike's comment. Do we believe euro dollar can reach 120 over the summer? Firstly, yes. Secondly, don't get bogged down focusing on numbers. Okay, numbers make good clickbait. Worry about the trend. Okay, don't fixate on a number. It could go to 119, it could go to 125, it could go wherever. Okay, we have got a trend in play at the moment in the euro, in euro dollar. That's what you need to focus on. Okay, so don't get fixated by numbers. That's for headline writers. 120 is a big fat round number. And if you get to 120, it'll be 130 next. Okay, worry about the fundamentals and what is going to keep the price going and up there. Okay, numbers don't matter. Trust me, from someone who doesn't mind a long-term trade, and I'm not that focused on the numbers unless it's a real huge range edge or something like that. So worry about the direction, the trend, what keeps it going or what can stop it, and then you can worry about the numbers for where you're going to trade with or against that outlook. All right, that's it for the headlines. Has you got anything else, Kay?
Oh, no. We
Good.
think we've covered everything and more.
Yeah, that's what we like to do. We like to keep all our viewers informed. I hope we're keeping you all informed. Are we keeping you all informed, viewers? Let me know in the chat. Right, where should we go next? I suppose we better look at some pricing. We should do that. A little bit of a pause going on today. I'm going to start with Aussie dollar. I'm just going to run through a couple of bits and bobs that I'm in. So I finally got triggered on my buy stop. Not quite the reaction I was looking for. I thought if we get a break here, we might go on and have a decent move up. I was getting a bit cautious just before because it was looking like all this stuff was end of month, and I came close to actually pulling my orders because I thought I don't want to get stuck in the middle of all this end of month stuff. Chances are we'll trade up through my buy stop by 2 pips and then reverse all the way down to my stop loss. When we did a bit better than that, we got up, what did we get up? 9 pips above my entry before coming back. The dips are still fairly shallow, so it's still, maintaining the bullishness, but I'm not overly keen on this trade at the moment. I wanted a big blow through, at least to lock in some profits. So I'm going to watch this one carefully, see what we want to do. I've moved my stops right down out the way in case we get some end of month shenanigans going on. And then maybe once we're over that hump, we do continue on. But for now, I would have liked it if we'd have motored on. We couldn't even get to the next minorish level up here at, it's going a bit of a longer chart, up here at 65, 70s. It's not much of a level. We've seen a few bits and bobs going on there. It's been on my chart for a while. Otherwise, if we do track on, it's going to be up towards 66 and then 66, sort of 30, 50 area, and then up towards 67. But until then, we're still waiting and waiting and waiting. We are holding up at the bottom of this other resistance area. So we had this stubborn 35, 36, 37 level. If we're holding that, it keeps this move alive for the upside. If we're back below there, then we're probably going to have to do all the hard work again, and then we're going to be playing the same old levels on the way down: 65.10, 65, 64.80s, blah 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 blah. So it's not ready to take off yet on this one. Dollar CAD is another one. I'm still short this. It's a funny one how text works sometimes. Yesterday, it didn't give 2 tosses for the 136.50 on the way down. But after that, it did, and it did for quite some time through Thursday into this morning. Now we're having a little bit of a mooch back above it, and it might be trying to build support again. So this could be retracing some of this move here. 36, 80, 85, 90s is the level above. We need to keep an eye on that. Downside though, it held the top of the zone, and we've stepped up support off of that this morning. So, you know, again, maybe this is just end of month stuff going through and it's going to unwind a bit there. If we come back down to this level pretty quickly though, and again, I'll be watching the clock to see whether it's end of month related, then we might get a little knock through here, and then the bottom of the zone and down towards these prior lows is going to be important for that one. Dollar MEX, still waiting to see if we're going to get the 1850 level. It's come out a bit, but as I've been mentioning, you get these little, we've got this little double bottom. We're getting protection ahead, protection buying ahead of that double bottom around the 83, 84, 85 area. So people who are long here are trying to keep it supported up here, which might mean stops are getting bigger below there. So if we can't bounce too far from here, then we could be heading through and it might kick on. And if it kicks on big enough, we might just go through that fib down there, or the 50% retracement 1877s, and then eyes are on the 1850, where I may cut out all my shorts and even have a little long play, but I'll see what's going on with that. Bounces thus far though today, late part yesterday, very, very weak. 19, 1910, probably your key levels above once again. Well, let's look. Go on, it's 10 past. I better pass it over to you, mate.
I'm not going to look at too much. Mark, you're asking about the DAX. Can I ask you, unless Ryan really wants to have a look at it, but we have this room dedicated to equities. Perhaps the best is to have somebody else look at the DAX. I haven't looked at the DAX. It's possible to do a technical analysis on it, but perhaps some people are they are following it day to day, and maybe they have a better answer. Just a quick look at the euro dollar, moving back down from this big 117.5 level as well. First support zone is holding. We had a bit of a look down there on the, well, I guess people just taking profits. That's what I was saying yesterday as well. But the first support is already holding around 116.80. That's your range for going into the US session. Then 116.80, 117, 45.50. That's where it caps right now. If we break through, have a look at when it does. Okay, I'm just going to repeat. We are in this end of month, end of quarter, end of half year environment. It could just be fixing stuff. Yeah. Really, to know the next direction for the euro dollar in the short term, I would say look at it come Monday 4 p.m. or so. But in the meantime, it is interesting that we are holding those supports. The global picture has not changed. Okay, we are still in a very supported environment. All right. If we crack under 116.80, there may be a few very short-term arrivals who bought it a bit late, run for the exit. That's also possible. And then perhaps we look at this bigger area of traffic anywhere from 116.40 down to 116, the figure 115.90. Yes, I'm going to look at gold. Cable is doing exactly the same. We are in this what I called it my target zone, at least. 137.40 up to 138.05. That is going to be an important zone. It can go for a walk over the month end, but again, will it hold afterwards is going to be the big question. For the time being, we have seen virtually no corrections at all. The best we had was like maybe, yeah, okay, we had 50 points, but it really, in cable terms, that has been no correction at all. So we're still hanging very close to this resistance zone. If we get a move through 137.70, 138.05 is going to be the next level, and the yeah, and then we will see exactly at what time it happens. There's a bit of intermediate, we may call the 137 the figure, but I think it's really 136.30, 136.40. That's going to be the main support zone right now. If it starts to break back below there, I'd say be careful, okay? Um, Gold, it is, when you have this Chinese framework, you have the Europeans, um, supposedly everything is needed to be taken with a bag of salt, of course, making a bit of concessions to get a trade deal done. Recall what I always says: gold is not only trading the dollar, not only trading lower yields, but also a hedge against everything that can go wrong in this world. And those uncertainties have gradually been, or are gradually being reduced, not completely taken away, just reduced. And what happened? We see the hedge being a little bit unwound. We are in a bit of a dangerous environment here, in my opinion, for gold. If we don't see a rapid rise, or we end the month so well above 3,300 or so, it may mean that in the meantime we have seen more of those hedges taking off. I'm not going to catch a knife right now. There are technicals, okay, who will be supportive, 32.65, 32.40, and then you go back to 32.10. But I just want to caution people against trying to catch knives in moves that are having where people are getting out of positions. Look what's happening. Look what's happened here. What's happened here. We have seen that without changing the global picture. The global picture hasn't changed for a dime. But in between what's happening, we have to also know why this gold is coming down. Less uncertainty, less stress, at least partially. I think there is a risk that this move continues, okay? And if you start to break down below 32.60s or so, maybe even an acceleration. So I'm not saying it's going to happen, but the way it trades now, it may happen, okay? This is what I think about gold. If you We need to get back above 30 to 33.10, 33 and a quarter, and then the pressure will be alleviated, and we may start to go back above. But for as long as that doesn't happen, I'm not going to be catching a knife. Silver is doing roughly the same, but due to the relatively better environment that we have, and potential trades and stuff, it's again not falling as fast as it did a pretty decent move here, but I think it has a better chance of holding up. Give me that low 35, and I'll probably start to add to my very long-term positions again, in small increments. And yeah, that's what I'm thinking. I could talk in length about the yen, but the only thing that really we need to look at in yen terms right now, the dollar yen is one thing, but I think the dollar yen is mostly driven by crosses. Most of the yen crosses are holding up very well. That's why the dollar yen is not falling out of bed. That's why every time the rest of the dollars give us the are doing a bit better, dollar yen straight away comes up. It's also trading on the back of risk. It's also trading on the back of UEDA again, saying that yeah, but underlying inflation is not yet there. I think that it may be that at least until the end of the month, those yen crosses will remain supported, and that in turn may prevent the dollar yen from really breaking under more or less important levels. Well, 143.65.70 is the support level of the day. Of course, bigger ones lower down around that 142, etc., etc. But it's just possible that we stick into this range, okay? Providing we may obviously allow for month-end flows as well. It could be that we are going to retest, but on the back of the yen crosses, I'm not sure that dollar yen is going to go much lower right now. Back over to you, Ryan.
Thank you very much, mate, and a great week of stuff from you, as always. Thank you, everybody, for coming to the Flow Show as well. Don't forget to get your name down last couple of days for what's coming up with ForexAnalytix as we transform into trading analytics like a butterfly emerging from a cocoon. So get in there. You could be in the draw for a $25,000 trader funding program account assessment thingy. Get on board or you'll be left at the bus stop. Thanks for coming to the Flow Show. Have a great weekend, everybody. See you all next week.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.